Hi guys, welcome to Traders Talk, and this is Ming Hon, your host for today's show. Actually, every every Tuesday I'm the only host, right? All right, great. Welcome to Traders Talk, and this is the show where we'll speak nothing but trading the stock market using options. Yeah. So for those who are learning to trade options, this is a show for you. And of course, for those who have already been trading options, this is a show also for you to actually catch up on what's happening in the market. Okay, so it has been yet another exciting week in the markets. Of course, many things has happened last week. The key thing was actually on the Fed rate hike, right? If you have followed the interest rate, U.S. interest rate was actually hiked by another 25 basis point last week, bringing it to 4.75. Yep, and of course, this is the first hike for the year. So far, there is actually going to be another two expected meetings. One coming in March and one more coming in May. Of course, the consensus is that there is going to be more hikes. Yeah, there's going to be more hikes. Yeah, welcome. So there's going to be more hikes in the coming next meeting, and of course, the following one in May, the Fed is going to actually rely on the data points that is actually coming out in the next few months. And of course, the main thing which they are actually watching is inflation. Inflation is actually one, and so far, inflation has actually came down from 9.1% topping in June, right all the way down to about 6.5% right now. Yep. And of course, one very stubborn inflation factor, which is actually not coming down, is actually on the services inflation, right? Meaning things like wages and all this, right? I mean, nobody wants to actually get their wages reduced, and of course, the only way your wage will be reduced is when you are actually getting terminated. Hopefully, that did not happen to you, because if you are in the US, there has already been a lot of people being retrenched. Major companies like Microsoft, Google, Amazon, and many more have already retrenched many thousands of people so far, and actually there is actually more to come. Yeah. And hopefully that does not affect you, because if you are in one of the on the list, then of course it will actually be a very painful thing, because it affects you guys financially. Yeah. So of course, to avoid that, then that's the reason why you guys need to actually also learn a skill, right? Learn a skill to actually learn how to actually trade. Yeah, because this skill is actually lifelong. Once you actually learn it, of course, you will be able to how to say, help a bit financially, whether it is $100, $200, or $300 a month, right? We are talking about US dollar, yeah. That will actually be much more than what you can actually get out of your job, hoping for increments, or even hoping for bonus. Yeah. So rely on yourself. Put the power on your own hands, and actually try to actually master some skills that can actually help you out a bit financially. Yep. So okay, today, of course, the topic which we will actually go through today, we will do a bit of learning. We'll do a bit of learning, and of course, we will actually go into trade digest, whereby we will actually go through with you example of trades where we will be putting in to actually generate a bit of income during these hard times. Yeah. And the session, we will also start the session with what has actually happened in the market last week, and also what do we actually expect to happen this week. I mean, it's good to have a certain form of expectation going into the week. Yeah, because if you actually go in blindly, right? I mean, if the expectation or if the charts patterns or the price action is bullish, right? Then of course you would not want to actually go in to the market and entering bearish trades, right? And of course, if it is the other way, then of course you would not want to actually go and enter into a bullish trade when market is actually on a downtrend. But of course, it is not easy to actually how to say catch the market trend. Of course, the overall trend you can actually see, but of course, within the short term, even within the day, the market can actually be very volatile, which will also show you guys how volatile it can be from a minute to another minute, right? Things can actually change quite fast. Yeah. Okay, let's go. Okay, let's see. Okay, give me a sec. I need to actually put this in so that I can see what I am actually talking also. Yeah. We have just passed first week of February, yeah, and of course January has actually been quite a good month, but coming into February, things actually start to become very volatile again. And if you can actually recall, last year February was also similar, whereby what actually happened, I think in January itself, people were still hopeful that the bull market can actually continue, right? And of course, after towards the end of January, right? Towards the end of January, things actually also started to turn, and to the effect when I think it was actually on 24th or 25th of February, right? Then the war actually started, right? If you can actually remember, the Russia invaded Ukraine, I think on 25th of February, where it is actually somewhere here, right? January, February here. Yeah, so 20, I think it was actually on 24th of February. Yeah, so 24th of February, you can see that we are here, right? Yeah, this was the time where things started to go bad, right? This was January, right? So you see, this was February, right? So you see, February last year, we actually started February, was still okay. I mean, we came in from January, we came down, and then of course February, early February, we actually thought that the the bull market can actually continue because of this, right? Then of course, after passing the first week of February, then of course things like spiraled down, and where we actually had the war. And of course, post that we came back up. Yeah. So market can repeat itself. You guys who have actually been in the markets long enough, you know that certain things can actually happen. There are good months and there are bad months, right? And of course, this time round, you can see that we are also coming back up, right? Coming back up, and of course, we are starting to actually come back down after last Friday's sell off. Yeah. Okay. Actually, last Friday was also an exciting day, which I will also talk a bit later on what actually happened on last week. Yeah. The chart is a bit small because somehow I could not load my normal chart. Okay. Where we actually had the trend line, right? You remember the trend line where we had this nice little trend line, right? This nice little trend line. Yeah. Where we were actually talking about the resistance at all these levels, which has not been breached for many times, right? Here, and at the end, we breached it about 2 weeks ago, right? We breached it about 2 weeks ago. And of course, once we breach it, then of course we are actually looking at some other resistance, which is actually right on top here, which is levels like let's put the levels up again. Levels like this level, yeah, this level, the 4,200 level. The earlier level, the 4,100 level here, right? The 4,100 level here has already been breached after last Wednesday Fed meeting, right? After last Wednesday Fed meeting, we had two bullish days, and of course on Friday itself, we initially we thought that the market would sell off after Amazon, Apple and Google missed their earnings, right? We thought the market would sell off because the futures had close to 300 points down pre-opening, right? The Nasdaq futures had almost minus 300 points, and then of course once the market has actually opened, right, Google and Amazon fell, and Apple also fell, but Apple fell down only for I think less than a minute, before people started to actually grab buy on the dip, right, on the discount, because Apple fell during the first few minutes after the market has opened, right, and practically almost the big part of the day, Apple actually was actually bullish, despite missing sales of almost 8%, and that didn't happen for many years, yeah. But it still stayed on strong during the day. Maybe you can also see, right, what actually happened to Apple. Let's put a slower time frame. Apple, where were we? This was last week, right? Yeah, it is here, right? It is here. Third, yeah. So it is here, right? So you can actually see when we actually open, right? When we actually open, we get down, right? We get down here, and that is only for the first 1 minute, I think. If you had managed to actually grab some shares or put in some positions when the price was coming down here, right, then of course you would have actually got this $10 move up, until it actually hit resistance of about 15740. Yeah, this level up here, 15740 if not mistaken. Yeah. And then of course after that it tried to breach again 2 times, then it actually sold off after the third attempt, 1 2 3. It actually sold off and of course once Apple got killed, right, there goes all the other stocks, like I think Google was also moving sideways during the day. Although came down, it was actually moving sideways. And of course, once Apple sold off, Google and Amazon also followed to actually go down further during that day. Yeah. So yeah, so you see this was actually last week, right? As SPX last Friday it actually went up, right? And of course after that it sold down. And yesterday itself, the sell off also continued to actually immediately after the market opened, right? You saw about a 20 points drop in the SPX. Here, let me put it here. Yeah, we saw this was 4120. Yeah, about a 20 points drop, right? About 20 points drop. And of course, you see the volatility is actually quite high. So you see this is basically about an hour, yeah, about an hour, it came down, and then after that, the next hour, it actually went up, went back up. You see, there is basically it actually went positive, right? It gapped down, and then at this level, it actually went positive. Plus, then of course, after that, it actually practically move sideways. Yeah. So again, the levels of resistance on the, I would say, around the 4,100 level, right? Yeah, it came down from 42 to 41 right now. Still remains quite strong. Yeah, this level right here still remains quite strong. And futures today, I think it was actually coming down earlier in the morning, but in the evening I briefly saw it. It was actually back up positive. Where is my futures? Okay, too many apps I can't really see now. Let me check. Yahoo. Yeah, it's here. Okay, futures is slight positive, plus 50 cents, which is basically nothing for S&P, right? So nothing for S&P. Okay, so what do we expect this week here? Let me put this back into daily time frame. Okay, today itself, I think about 1 a.m. If 1 a.m. the Fed chair is actually going to speak. So it is actually going to be quite a quiet, low volume trading day, because a lot of people would actually won't go into the market before he speaks. Yeah, because the Fed can change the direction of the market with just some of their words, right? Whether it's actually going to be a bull for the bulls or for the bears, right? I mean, they can actually move the market quite fast. Yeah, but anyway, we would actually expect some form of retracement to come, which is basically quite normal. Yeah, unless J Power actually uh, speak something which makes the market go haywire and shoots back up, right? Shoots back up. Yeah, which is basically what he did in the last round, last week, right? Okay, and of course, right now we see that the levels here would actually still be resistance. Yeah, this level here, 4,002, and now coming back to 4,100. Yeah, of course, yesterday itself, it actually still closed 1 point above 4,001, right? But of course, if it comes down, right, then of course it is actually going to be a bit more towards the bearish side, where it can actually go down further to levels here, to levels at the 4,000 level here. Yeah. Okay, so I would expect S&P to actually go sideways. It is within a range, sideways for some time. Uh, Wait until March. Wait until March. Yeah, but of course, next week itself on Valentine's Day. If you are not celebrating Valentine's Day, you can actually go and watch the CPI. The data coming out should be 9:30 on Valentine's Day, which is next Tuesday, right? 9:30 p.m. You can watch the CPI, and basically how the so-called monthly data, right, can also influence the market. Yeah, the market. Yeah. Okay, and the other thing which you guys also need to no, is of course one of the other reasons why the market is actually coming down is also because of the of course the interest rate, right? But of course what happened to the interest rate, right, is also this thing, which is the US dollar currency index, right, DXY, right? Okay, so when the Fed raised the rates, right, I mean, it is expected that the US currency to actually strengthen, right, because they are expecting more future hikes in March and possibly in May, right? So of course that brought a little strength to the US dollar, yeah, and the US dollar would have the strength of the US dollar would also have an inverse effect to the market. Yeah. So when the US dollar actually goes up, right? So if you look at the past 1, 2, 3 days, right, the US dollar has actually been going up, right? And of course, once this goes up, then you can actually see that the S&P would actually come down. Yeah. So that's another gauge where you guys can actually monitor to look at possible trends or direction where the S&P is actually going. Yeah, going. Okay. So this is okay. Where did the moving average go? Okay. Yeah. Is this the moving average? Three moving average. Oh, this is the 5 minutes chart. Okay. So go back to the here. Okay, so the other thing is, of course, last week, if you've seen our show, we were actually also talking about the golden crossing, right? The golden crossing has actually happened. Okay, so this is the golden crossing where the 50 moving average is actually crossing the 200 long-term moving average. And we actually did that, I think it was last Friday, last Thursday itself we did the golden crossing. Of course, this golden crossing is one indicator where we say that the trend is actually going to change, right? From downturn, right? Downturn coming down to possibly coming up. Of course, I would say yes. We would actually expect the market to actually turn, but the thing is when, right? It is not going to turn immediately tomorrow. Yeah, because the S&P can actually continue to actually go sideways, and of course these can actually still how to say it won't slope, so it won't go up so fast, and of course the 200 moving average won't start to slope up so fast. It can actually move around sideways for a while. I would say possibly until maybe after May. Yeah, after May. Yeah, when things are how to say, when all the tightening things that the Fed wants to actually do is done. I mean, unless inflation goes up again, right? Goes up again, where they have to actually lengthen their tightening process, right? Otherwise, of course, the how to say the market would actually start to actually turn the other way. Yeah, the other things, of course, like I mentioned earlier, was on the economy, right? On the economy, um, um, things are actually also going to be a bit tough for companies. Earnings are actually coming down. Forecast earnings have been reduced, right, by most of the companies, and of course, this would also bring about pain to the economy. And of course, one of the things which the Fed chair have actually said is that they need to inflict pain, right? when the market is in severe pain, right? Severe pain, that's the time when they will also how to say start to change their policies, right? From rates hike to cutting rates, right? I mean, when the economy is in bad shape, right? The Fed will actually change their policies. from tightening to easing, right? So that things, I think we have to probably see it within this year. The faster we see it, then of course the lesser the pain which we will have, and the clearer, the more clarity, or the clearer the market will be for us. Yeah, but of course, whatever it is, even if the market is actually coming down, right? Of course, still go through your so-called plans, right? I mean, if you actually want to invest, dollar cost averaging is one good method for you to actually get good companies at low prices. Low prices. We have talked about that many times, and as we said, the market have not had enough pain for us to actually add enough stocks, good stocks. Yeah, good stocks. Only buy good stocks. Don't buy all the meme stocks, right? Like BBBY, where you can actually practically double your money, right? in a week, right? Those bankrupt companies, but of course you can also lose a lot of money if you're actually betting on those companies. Yeah, so that's the thing on the market. Short term, mid term, everything I have probably covered, and of course things can also change quite fast. So remember to watch our show every week. Okay. um, okay, so Nasdaq, Nasdaq, yeah, you see the huge rally up, where it was actually paused in the last 2 days. Yeah, last 2 days. Okay. And of course, today itself, I mean, yeah, because this has actually rallied on so strongly here, right? All these levels, right? Yeah, you see that it starts to actually hit the resistance. It don't manage to actually how to stay above these kind of levels. This is somewhere about 12,800, right? It don't manage to actually stay, and of course there is many more resistance levels above, right? There's many more resistance levels above. So of course, if you are trading, then of course it is, if you are trading on stocks like on Nasdaq stocks, right? It's going to be a bit challenging. It's going to be a bit challenging because things can go up for a while, and then it can actually come back down quickly. Yeah, unless you are like Tesla, right? Whatever the market has been in the past few days, bullish, bearish, right? But Tesla continues to actually make its way up, right? Okay. And I don't have any positions on Tesla. It is how to say, not really a fan. I mean, if not really a fan, right? But of course, there are many other stocks which you can actually trade, which are actually less volatile. Less volatile. Of course, the premium which we are actually getting from stocks, options nowadays is actually not that much, right? Only quite a few of good stocks left, where you can actually get a high IV, right? Mainly because of this mini rally, bear rally up, right? A lot of the IVs of stocks has actually dropped, but of course, don't worry. I think it will actually come back again when market retraces down. Yep. So hopefully the levels of this about 12,000 levels, right, will actually still come back, right, in the weeks to come. If the market actually comes back down, then of course we will be looking at this 12,000 level as the first level of support here, right? Support here. You can see that at these levels, right, it is actually how to say, here at these levels here, right? You can see that yeah, between 11,000, I would say 11,500 and above, right? Yeah, this is actually going to be quite a strong resistance area. Yeah. Okay. So going forward, I mean, what kind of strategies which we actually want to use? when the premium comes back, of course, iron condor is going to be one good strategy for you to actually trade on, because if you actually expect market to actually move sideways, right, then of course we can actually trade the market within the band, and of course that is actually also a strategy which we have actually applied on many stocks, and especially if you're actually talking about doing it on ETFs, okay, ETFs, not those super duper ETFs like SLC, yeah, where they are how to say track within things like Facebook and all this, right? Those would can actually jump quite a lot. Yeah. So if you actually trade on, how to say, less volatile, ETFs, right? ETFs, then of course it would actually be how to say, quite safe trade range where we can actually adopt on this kind of stocks. One of it is actually XLE, right? XLE. I think we have actually covered this many rounds, right? Where we actually trade this XLE using iron condor. Yeah. If you look, yeah, this was one time where we actually did the trade here. Yeah. And of course, this we also did a trade digest on XLE somewhere back in October, right? So this was the time where we actually traded using the iron condor strategy, where we were actually trading a range. And of course, during that time, we were also saying that the possibility that it will hit the upper range is higher. And of course, with that, then we actually somewhat change our iron condor strategy slightly, where we were actually putting on additional bull put spreads on the lower side of the iron condor. Yeah, that means basically we 2x the bull put spread against the bear call spread, right? So when the prices goes up, right, then of course we are actually how to say buffering more of the losses coming from the bear call spread with this bull call spread. Yeah. The other one which we also covered in Trade Digest earlier, right? I think in November, if not no, this would somewhat be in December. I think we did also XBI, right? XBI. We also talk about iron condor on this XBI, and of course, if you have seen our and if you have actually done the trade, I would say the trade is in a slight profit right now. The trade is actually in a slight profit. Right now, if you have actually done a normal iron condor, maybe about $20 to $30 of profit, because XBI has actually shot up by quite a lot. The bear call spread on the upper side is actually taking some losses, but of course on the bull call spread, the profits coming out from a bull put spread, profit coming out from there is more than enough to actually cover the losses on the upper side. Yeah. But of course, again, because of our so-called slight upwards bias direction on XBI, right? Again, we have actually used, we have modified our strategy, and we have actually buffered not 2 times but 3 times on the bottom side. Yeah, 3 times on the bottom side, which means that basically a conventional iron condor would have a bull put spread and a bear call spread, right? Bull put spread and a bear call spread, one. But of course, we did 3 bear call spread with a pre-bull put spread with one bear call spread. Of course, it's not called an iron condor anymore, but basically the initial structure of it is actually our intention was to actually trade a range, but because of the so-called upwards direction, right, we actually taken additional insurance. Like, you know, I like insurance, right? You have taken additional insurance just in case the price actually shoots way past our upper strike. I think it was actually about 91, if not mistaken. 91 is actually the upper strike. You can see that this day here it has actually breached, but of course for the past 2 days it has actually come down a bit. Yep. Okay, so that was actually XBI. I think we also did it on our TikTok. This strategy, the XLE also, I think we also put it on TikTok. Short videos, if you actually want to just go back and see what kind of strategies which we put in, you can actually go to our TikTok page to actually look at the strategy. Okay, so today itself, also I'm going to give share with you guys another X. That's why I said the trade success for trading ETFs in volatile markets has been quite well for the past few months. Because if you do a single stock, right, you have to worry about earnings, you have to worry about so many things, right? So of course, single stock, the prices can actually move up and down quite a lot, and probably even in a short time, right, it can actually go up or down very fast. But if you're actually doing on an ETF, because it has a basket of stocks, right, then the chances of it gapping up and gapping down in a big way is actually less. So that's why sometimes it is actually safer to actually deploy certain type of strategy on ETFs. One thing which you guys actually have to watch out is the liquidity of some ETF may not be that good. So you actually need to you actually need to take care a bit. Take care a bit. Today, although we are actually doing X, but this is actually not ETF. This, don't mistake this as an ETF. Although it actually starts with X, right? Okay. So today we are actually going to do a trade on XOM. XOM is actually Exxon Mobil, and if not mistaken, I think Exxon Mobil has made over 50 billion of profits, right? I think last week, right? I cannot imagine how much money is that, and how much you guys are actually spending on petrol. Petrol. Okay, so these petrol guys actually make a lot of money. Okay, so one thing which I actually want to share with you guys today is why not make off some money from these petrol guys, right? And to actually subsidize our own petrol consumption. Okay, I don't know how much you consume petrol a month, but basically I would say maybe in a week I would actually consume maybe about $100 to $120 of ringgit of petrol. Okay, so in a month basically I spend about 400 to 500 ringgit of petrol. Okay, so in order to compensate and get these petrol guys to pay for my petrol, right, I actually want to enter into a trade where we actually get back at least 100 USD within a time span of 30 days. Okay, how would you like to actually do that with me, right? Okay, so this is for learning purposes. I will just share with you how to actually do this strategy. Okay, of course, if you actually want to see the so-called price trend of XOM, you can actually see, of course, it's actually going on an uptrend and on an uptrend. Of course, in the recent weeks, it is actually going. I would say the uptrend has been slightly broken a bit, right? You can see that it has actually came down a bit here, a bit here. And of course, it starts to continue back up, but quite choppy. Day to day, the movements are actually quite choppy. And of course, right now it's actually coming down after the earnings has been earnings has been announced, yeah, and of course XOM has also said that they will do share buyback, they will increase dividend payments and all these kind of things, right? So after that, things has sizzled down a bit. So it may be possible that XOM would actually continue to actually come down a bit, back to levels here, back to levels here, right? Back to levels here. Okay, so this is basically our so-called price action thesis, right? Price action thesis, which we actually put on XOM, and of course with this, then we actually apply the strategy. Okay, so uptrend. Okay, so when it's actually going uptrend, then of course one thing, uptrend means that the price can actually continue to go up, continue to actually go up. Okay, continue to go up. Price, this is one, price can continue to actually go up, breaching back this resistance level of about 114 or 115, right? And then of course, if it actually comes down, then we are actually looking at a level of about 104 here, yeah, if it actually comes down. Okay, then we actually apply the strategy right now with this thesis, which we actually put. Then we actually apply the strategy. Okay, let me just go to the trade. Okay. Okay, we are here. Okay, so this is the trade platform, Tastyworks platform. If you are not familiar with this, of course you can use other platforms, but for me to show you this, I actually use this Tastyworks platform. Okay, so XOM, yeah, you key in the ticker XOM, then of course you can actually see the charts of XOM here, and then you can see the liquidity of XOM is 3 stars on the right side. On the right side, you can actually see the data of XOM, 3 stars. IV is actually about 30. Not that great, but still with less choices to choose, then of course it is okay. Of course, IV rank is also not too great, 12.4. We would prefer it to be around 20 to 30 to actually get more premium. But of course, let's see what we can actually do with this. Yeah. Okay, so we have actually done similar trade, same kind of same kind of trade structures, which I'm going to show you. But of course, we have actually closed the trade last week before the earnings came out. Because we scared that the XOM makes so much money, suddenly it will breach towards our upper level, because earlier you were actually watching the chart, right? That the upper level is always hit, right? It is actually going up high, right? So we closed the trade early, but of course, had we not closed the trade, right? You can also see our trade here. Yeah, you can actually see our trade here, right? On this side. Had we not closed the trade, then of course the trade would have actually given us a full $100 of petrol subsidy. Okay, because we did the trade at $1. We closed the trade at 50 cents. Yep, we closed the trade at 50 cents. But if we were to keep it until last Friday, right, then we would have actually taken the full $100 subsidy from XOM. Okay, but I mean, you how to say, we cannot predict, like, I mean, like I said, we cannot predict things, but to manage our risk, right, we would rather take 50% of our profits than zero profits, because once it breached the upper level, that's where you will actually not lose money, but you will not make money. Yeah, you will not lose money, because this trade, which I'm going to share with you, does not have a upside risk. XOM can actually go to from now about $112, $11, right? XOM can go to $200, but you will not lose money if it goes to $200. Okay, so this trade does not have any upside risk. And of course, why it does not have upside risk is the way we actually structure the trade. Okay, so we're doing a 1 month petrol subsidy, right? So since we are doing a 1 month petrol subsidy, I would choose the strike price to be about 30 days. Yeah, 30 days. So I will take 32 days here. This is actually closest to 30 days. Okay, what I will do here is this trade actually comprised of two strategies. Okay, the first strategy is actually a bear call spread. Okay, a bear call spread. Okay, so a bear call spread, basically we will just try to actually take a spread that will actually give us a premium of 30 cents. Okay, a premium of 30 cents. And you will just need to actually go to do a one how to say normally it will be a $1 spread, $1 spread that gives you 30 cents. For example, if I do 117, 118, right, a bear call spread, I would actually get 26 cents, right, 26 cents. So this I can't I want to achieve 30 cents. Okay, so when I want to achieve 30 cents, then I will have to change the strikes. I will sell one call and buy one call $1 with a put. Okay, so I move this around. Then of course here I 11617. Then you will see that we will actually achieve this bear call spread of 30 cents. Yeah, and of course just now you recall the upper resistance level for the chart which we actually saw, right? We were actually looking at about 116, 115, 116, right? Okay, so this is more or less coming towards the upper level of the chart's price action. Yeah, so this you place it there. Of course, if you can move above, that is better because that will actually give you more security. But of course, if we actually come further away from the upper resistance level, right, then of course the premium is actually less. So we can't do that. We will do with 116, 117, and of course because the trend currently is actually retracing, right? Then of course you would actually have a bit more buffer on the call side. I would say this is not the risk which you need to be worried on. This is not the risk because there is no upside risk. Okay, and why I say there's no upside risk is because we are actually taking 30 cents out of this trade. The max profit we get is 30 cents, and the max loss which we actually get is 70 cents. Yeah, because we're doing a $1 spread, we are collecting 30, then the max loss is 70 cents. Yeah. So to avoid how to say to have a no risk upside, then we actually do a trade on the put side where we actually need to so-called get a premium of at least 70 cents by selling a put. Okay, by selling a put. So when we actually scroll down here, the price level which we can actually sell a put to get 70 cents is at 100. In fact, we will actually get about 78 cents here, 78 cents. Then that makes plus the 30 cents, it comes to 108. Okay, so what happens here is that, okay, if the price goes up, then you will make a max profit on your put because the naked put will expire out of money. So you will get this 78 cents full premium. Okay, but of course, if it breaches your bear call spread, right, then what you get is you will lose 70 cents. Yep, so you will lose 70 cents. So at the end of the day, if it breaches, you will still get to make 8 cents out of this trade. You will still get to make 8 cents out of this trade. So no risk to the upside. In fact, you make money if it breaches. Okay, then of course your risk is on the low if the price actually goes down. Yeah, goes down. And of course when the price goes down on this 116, 117, you will get the full premium of 30 cents. But of course that 30 cents might need to actually cover the losses which you can actually incur on the downside. But of course on the downside, your max loss is actually $10,000, right? Because you are actually doing a naked put. Yeah, but of course XOM won't drop from one day to to 10,000 one day will not drop $100 a day, right? So oh, sorry, in a month. Yep. So of course, the risk is also quite manageable. And of course, if you are doing 100 here, right? Earlier you were actually watching the chart that there is also a support level of this at about 104, which is also above your strike level of 100. So you still have a bit buffer on the resistance, so support side, to actually cover for in case the price drops. And in fact, this delta which you're actually choosing is only about 12, which means that you have a 88% chance of winning this side of the trade. On the, if the price actually goes down, you still can actually win 88%. And overall, with the combination, right, your chances of probability of profit goes up to 91%. Oh, okay, 91%. You still got 9% that you will lose on the trade, but of course, if it goes up, you still make 8 cents, not too bad. But of course, if it goes down, then of course you will need to actually manage the position on the put side, just like how you actually manage a naked put. You can continue to actually roll the put over for another month, yeah, to have the price of XOM go out of money, yeah. So yeah, so this is the trade which we are going to execute later on once the market opens, and hopefully once again for this month we can actually get free petrol from XOM. Last month we already got 50% subsidy, so this month hopefully we can actually get 100% subsidy. And of course, these kind of trades you can actually roll do it on a monthly basis, provided that the price action fits the thesis which you are actually going to go in using this strategy. Okay, so let's put the trade in. Yeah, this is called Jade Lizzard if you want to actually know the strategy. And the buying power for this trade is $1,136. Yep. So basically the return of about 10 close to 10% in a month. Yeah. Okay, so we have actually put that trade in, and of course, if you have any questions on how we apply this strategy, yeah, you can actually check put on the chat box if you have any questions how to do this, or even put it on our Facebook if you have difficulties. And of course, if you have understood the thing, and of course if you decide to try out the strategy, by all means also post on our Facebook, so that we know that you are testing it out, and you would like to also get subsidy from Exxon Mobil, yeah. Exxon Mobil. Okay, so hopefully that this trade will work out for us, yeah, and of course once we enter the trade, we will actually post it out to let you know that we have done it. And of course, once we exit the trade, we will also let you guys know that we are actually exiting the trade. Okay, so let's hope for a good market this week. And of course, be careful. Fed chairman is actually speaking at 1 p.m. at 1 a.m. Okay, if you do not intend to stay on that late, go to sleep. And just continue to actually look at the market tomorrow. Of course, the things which Fed chair would actually talk about, right, would not affect all so much, right? It has less. That's why it has less effects on stocks, all stocks, right? All stocks. But of course, if you are talking things on like gold or Nasdaq stocks and all that, that could actually be more volatile. So that's why we are also not so worried if we actually enter this trade before market, before he actually speaks. Yeah. Okay. So until next time we catch up, please don't forget to like and share our shows. Also subscribe to our newsletter. We are starting to actually cover a bit more things on the Hong Kong market, yeah, because that's currently where the action is right now with volatility in the US. We have also started to actually move some of our options trading positions towards the Hong Kong options market. Yeah, so if you want to actually learn how to do that, just subscribe to our newsletter, and we will actually be covering more on that side. Yeah. Okay. So see you. Bye bye.